Okay, guys, Jay Hughes here again, and this is more than just an update. It's more of an introduction. We have 5 people in our group that we test everything we possibly can, and we split, as I've told you before, we split the risk of all these tests, of all these signal services, EAs, things of that nature. This particular account is a master trade copy account. The only reason we're sharing this with you is because um, it was working too well to be comfortable. As we all know, you've got to set expectation. Nothing runs 100% forever. So I'm going to share this with you, and it's still a great account. As of today is the 30th of January, right? We were up with this sucker like 800%, something like that. Now we're up 509 cent, 504%, something like that. And we had a big drawdown, a big loss on this particular day. Now, I'm going to share with you why no one took this loss. But even if we took this loss, we would still be up 504%. Again, I know this is something I've got to explain to you, like, why aren't we happy with that? Well, we're not happy because there was something called an equity drawdown that we had to make up for. So let's take a look at this. Okay, guys, here's the full story right here, and this may be shocking. This master account started with $950 October 27th, 2020, right? I'm sorry, 2022, so last quarter. Now, when you look at this, it was up. Let's see what day this was. It was up on the 27th, January 27th. It was up to 7,804 bucks. We had a drawdown all the way to $2,300, over $2,300. That's a 70% drawdown. Now, it takes nerves of steel to have that sort of drawdown. A lot of people would have just jumped right out of it. Some people would have had some sort of equity stop loss on this, but there's no reason why we would have experienced a 2370 drawdown. Now, it still could have been a losing trade right here, but it didn't have to be this much of a drawdown. And then it bounced back from a 70% drawdown to 5610. And that's what we have now. We're right at like 5,000 some odd dollars if we allowed it to recover from that 70% drawdown. Now, something else I want to say. Neither one of us, I mean, our small group of 5, we did not suffer this drawdown in our real money accounts, even though this is a demo account that we're trading in. But I mean that we're trading from. But this is not one of those high frequency trading EAs. It's like 1 or 2 trades a day, and it's not in the most volatile of times like the U.S. market. Another thing, another rule that we all know, the 5 of us that is we don't trade. Let me see, can I find this? We do not trade U.S. session. This trade started like at 1520, which is past 7 a.m. And most of us, during this one at least, all of us, we turned off our EA. So we wouldn't have even caught this drawdown. We wouldn't have made this particular trade. That's a managed EA. But let's just say, worst case scenario, if we just kept the EA running on our live accounts, the worst case scenario is we would have been down 30%. Yeah, something like that, around 30% on our money, and still up 56 up to $5,600 from 950. So we're doing quite well, guys. So what it's saying is, if you were following us from the beginning, you would still be up 504%, 504% from 950. I don't have that up here. 950, $950 to over $5,600. So that's the cool part. Now, if you would have started trading here and not managing the account, you would have been down 70% of your money, and then it would have bounced back up. Excuse me. And you would have lost about 30% of your account. So it's important, guys. Do not let these EAs, copiers, anything that you don't know anything about change up your money management, change up your risk tolerance. Just make sure that you're still managing the risk on your EAs. That's it, man. Go make some real money.